The market is down, but these stocks are not. Hey guys, Ross Givens here. I want to give you a little free tip on how to look for stocks that will come out of a market pullback like we're seeing right now, and which ones are going to be the strongest on the back end. All right, so let's take a look at the market. Now, this here is a chart of the NASDAQ index from the start of September to now. So it's over the last 3 weeks. And as you can see, the index is down around 11.5%. Yesterday, it was down about 14%. So everything is just bleeding. Apple's down, Tesla's down, Amazon, Google, they're all down big, but a handful of stocks are not. Take a look at this. So this is the open portfolio of my Precision Volume Alert service. And we've got 5 trades on here, bought right around the same time this market started pulling back. And you'll notice we're not seeing the same negative performance we got out of the market. We're not down 12, 13, 14%. In fact, most of our stocks are about flat, with one of them up 23% in just the last 3 weeks. So take a look at this chart. Now, the bar chart, the green and red you see right there, that's Apple over the month of September, right? The stock is down 17%. Now, this was the darling of Wall Street. It's been a stock that just couldn't stop, and people thought there was no price too high to pay. Analysts were raising the price targets on this stock. It's at 110. They're calling for 120. They're calling for 150. And now the stock is getting pummeled during the month of September. However, look at that blue line. That's one of the stocks we've owned over the same period. Now, it's not up, right? When we get a bloodbath in stocks, it'll take everything down with it. But notice it's only down 4% versus 17%. This is what you want to see from top stocks. This is the kind of stock you want to own, those that do not get dragged down as much as the overall market. Because when things return to strength, and they always have, they always will, the market will once again go higher. The stocks that didn't come down as much are then on the other side going to go up much more. They're going to outperform the market on the rebound. So when you've got Apple and Amazon and Google and all these big names that were just surefire bets taking 15, 17, 20% hits, but then you got a portfolio like ours that's down 2%, 0%, up a little bit. One of our stocks, again, up almost 21%. As soon as this market turns around, which could happen any day and the strength returns, these stocks are going to moonshot higher and wildly outperform the market on the upside, especially when you're following a proven trading method like I am. Now, as you guys may or may not know, my service follows a volume roadmap that identifies key areas in the market where institutional traders like to buy and sell. It shows you big support areas, the ideal places to buy and sell these stocks. Let's look at a couple of them. So this is one we're in right now, and I want you to look at that profile on the right side of the chart, that volume roadmap that shows you the best places to buy and sell the stock. Now, this stock began bouncing off the lows in March after the COVID sell-off, pushed higher, and then has pulled back to find buyers. But what's happened in September when the market's getting pummeled, everything's falling off the cliff, this thing's holding steady. It's staying right there in the area where we bought it because it's an area where institutional investors, the big money out there, has been accumulating a position. And again, as soon as this market turns around and see some strength, this stock is going to moonshot higher in all probability and will likely push at least up here to the $60 mark for a quick 20% bounce, and then likely higher as it moves to new highs. But notice how the stock is holding right here in its zone. It's not falling like everything else. And it's because we're following this volume roadmap, because we're following the big money and where they've shown us that they are buying these stocks and are going to support the current price. I'll look at another one. Now, this is the stock we're currently up around 20% in, and look at why we're up in this stock. So the thing was pushing higher, again, during this market rally from like $2 all the way to $14. It pulled way back. The stock was down 50, 60%. Most people are selling and getting short, but we were buying this stock. So why were we buying it? Well, the roadmap told us to buy it. You see here very clearly there's a big volume area on the right side of the chart that shows us that's where institutions are buying. It's where they accumulate a position. They like it there. They're going to step back in and continue buying at that price and push the stock higher. It's exactly what's happened over the last couple of days. The stock went from $6.50 to $9.50 in a period of 4 days. It's likely not done. I'm looking for this stock to push to $12 and beyond to give us an 80, 90% return on the stock in a short amount of time, and our option will likely return several 100% over that same period. Again, we're looking at a stock that is rallying 20+% when Apple and Amazon and Google and the rest of the market are taking severe hits and going the opposite direction. So this is what you want to look for. Take a look at your own portfolio. Look at the stocks you're holding. You need to compare that performance to the overall market. Just bring up a chart, look from September 1st to now, or see how much the indexes are down. If your stocks are down more than that and showing weakness in excess of what the index is doing, those are stocks you may not want to hold on to. All right, those are stocks that are likely not going to bounce as hard coming out of this. However, those stocks that are down much less than the market, or even better, up, like this stock, during this period of weakness, are going to thrive on the back end. They're going to exceed the performance in all likelihood once this market pushes back higher, as it has always done again and again. This is why I follow volume. This is why, to me, volume is the only indicator that shows you what's really happening in the market. Because if you look at a stock chart and you're analyzing it by, say, candlestick pattern, see, well, it went up here to 90 and it went down here to 30. That's fine. But if it went down to 30 for 10 minutes and only a couple of people bought or sold there, it's not really any significance. Because at the end of the day, it's not me and you and a kid with $200 in a Robinhood account that are moving this market. It's endowments, it's pension funds, it's mutual funds, it's institutional dollars. They're the ones that move stock prices. So their actions are the only ones that really matter if you're trying to figure out what direction stocks or indexes are going to go. All right, and by using volume, we can decipher their actions. Look, you're not going to call Goldman and get someone on the phone. They're going to tell you, oh, here's where we're looking to buy this stock. We're putting $3 billion into Microsoft at XYZ price. They're not going to tell you. So you got to figure it out on your own. The way to do that is to analyze the volume. This volume shows us at what price the big buyers are building positions in a stock. If they bought tons and tons and tons of this stock at $7 to $8, it flew up to 14. It's on the way back down. Look, $7 to $8 is where they like this stock. That's where they're going to buy. So it's likely they're going to do it again. That's going to provide support for the stock, and it's going to be the area the stock bounces back off of. So what that lets you do is take trades like this one. It lets you buy a stock that just fell 50% when everyone's freaking out and getting in right there at the low before it starts to surge back higher. It identifies high probability places to enter stocks, and on the other side, high probability places to sell, because the same volume indication that shows us, hey, here's where they like buying a stock, we're going to see the same thing on the upside. When the stock's up very high, and we see heavy selling, then we know there's the likely place we need to get out once the stock pushes higher. So it's a fantastic tool that gets you in, gets you out, and lets you maximize those gains by building positions and choosing the right option to extract the highest possible percentage return, because you know with a fairly high degree of likelihood not only that stock's going to go higher, but roughly how much higher it's going to go. So that's what we do here at Precision Volume Alerts, and that's why our portfolio is holding up so well in a down market. Look, there will be times when you don't make money in the market. You will have a week or a month when you were down. When the NASDAQ falls 12% in 3 weeks, heads up, most stocks are down. A couple like this one are going to be up. But if you can build a portfolio like we have that holds up in this, that stays roughly flat or up or down 1 or 2%, while the index is down 12 to 14%, you're going to have yourself a nice winner as soon as things turn back around, the markets push higher, and you should make a lot of money on the other side. Now, if you want to learn more about this methodology, I've got on-demand training. There should be a link below this video. I did a live webinar with my good friend Dustin Pass not too long ago, and we've put the recording online. I don't know how long it's going to be up, but I want you to watch this now. Again, it's completely free, but I'm going to take you through this entire methodology. I'm going to show you specific trades, the ins and outs, how to identify these high probability buy points and sell points, how to design your trades to, again, extract the highest percentage return, how to take a 20, 30% move on a stock and make 100, 200% on an option trade. It's the same method and the exact same tools I used to call the low of this market before the COVID sell-off within 4 points of the bottom, less than 0.1% from the bottom. We identified the buy number simply by following this volume roadmap. So go ahead right now, click that link, watch this on-demand video. It's about 45 minutes long. I promise it's going to be worth your time. It is going to show you the best way to look at the market, the best way to identify the best places to buy and sell stocks, and it will completely change the way you invest.